Once a towering institution among Vietnam's commercial banks, OceanBank experienced a dramatic rise fueled by the country's economic liberalization, contributing significantly to its overall economic success. However, amidst this growth, OceanBank became one of the rare corporate entities in Vietnam to be rocked by a tremendous scandal. The bank, previously recognized as one of the largest in the commercial sector, was soon riddled with enormous financial losses. By the close of 2019, the company's accumulated losses had soared over $742 million, and numerous executives were imprisoned due to financial mismanagement and related scandals. The saga took a turn in 2015 when the State Bank of Vietnam, the country's central bank, took over OceanBank. The acquisition price was stated as 0 Vietnamese dong, indicative of the bank's fragile operations with serious mismanagement. Essentially, the central bank acquired OceanBank without any financial exchange. However, this is merely the surface of the entire debacle. There's much more to investigate and understand about the evolution of OceanBank's situation, transforming it from a leading bank into one of Vietnam's most significant corporate scandals. OceanBank was established in 1993, at a time when Vietnam was undergoing a major economic transformation under the Doi Moi policy. This policy, which began in 1986, marked a shift from a centrally planned economy to a more market-oriented system, with the aim of promoting economic growth and reducing poverty. As part of this process, the Vietnamese government sought to develop a modern and competitive banking sector that could support the country's growing economy. In the early years, OceanBank focused primarily on providing banking services to the maritime and shipping industries. However, as the Vietnamese economy continued to expand, the bank recognized the need to diversify its services to cater to a broader range of customers. By the early 2000s, OceanBank had evolved into a full-service commercial bank, offering a wide range of financial products and services, including retail and corporate banking, investments, and insurance. During this period of growth, OceanBank benefited from several factors, including the liberalization of Vietnam's financial sector and the increasing demand for banking services among the country's burgeoning middle class. The bank's expansion was also supported by its close ties to the ruling Communist Party and state-owned enterprises, which provided it with access to lucrative business opportunities and preferential treatment. However, the rapid growth of OceanBank also exposed it to a range of risks and vulnerabilities. As the bank expanded its lending portfolio, it became increasingly exposed to high-risk sectors like real estate, infrastructure, and shipbuilding. This made OceanBank vulnerable to market fluctuations and economic downturns, as a significant portion of its loans were concentrated in these volatile industries. At the same time, the bank's corporate governance structure was characterized by a lack of transparency and accountability, with a small group of individuals wielding significant influence over the bank's operations. This created an environment in which fraud, corruption, and other forms of misconduct could thrive, ultimately contributing to the bank's downfall. The warning signs and red flags of the company began in the bank's rapid expansion. It was fueled in part by aggressive lending practices, with a particular focus on high-risk sectors like real estate, infrastructure, and shipbuilding. This made the bank vulnerable to market fluctuations and economic downturns, as many of its loans were concentrated in these volatile industries. In addition to its risky lending practices, OceanBank was also plagued by corporate governance issues and allegations of corruption. The bank's management was dominated by a small group of individuals with close ties to the ruling Communist Party and state-owned enterprises, raising concerns about cronyism and conflicts of interest. The State Bank of Vietnam, the nation's chief financial authority, began taking a more active role in overseeing the operations of OceanBank in 2014. This was prompted by initial signs of financial mismanagement at the bank, triggering concerns that OceanBank's financial stability was in jeopardy. In a routine operation, the SBV launched a special inspection of the bank's financial dealings and day-to-day operations. However, the inspectors discovered far more than minor irregularities. The examination brought to light a disturbing pattern of fraudulent loans, along with numerous other financial irregularities, painting a picture of systematic misconduct that ran contrary to the financial governance norms. The fallout from this inspection was immense. The chairman of OceanBank, Ha Von Tham, was arrested in October 2014. Tham's arrest marked a significant turning point in the investigation, shedding light on the severity of the bank's misconduct. This arrest pointed towards not just isolated incidents of fraud, but suggested an ingrained culture of corruption at the highest levels of the bank. The scandal deepened further in the months following Tham's arrest. As investigators delved deeper into the bank's operations, more evidence of serious wrongdoing began to surface. One of the most shocking revelations was the discovery that OceanBank had been paying its customers over 1.5 trillion Vietnamese dong, equivalent to roughly $67 million in illegal interest payments. Moreover, the investigation didn't end with Tham. The scandal also engulfed other influential figures in Vietnam's financial sector. For instance, former Petro-Vietnam chairman Dinh La Thang, a prominent figure himself, was ensnared by the probe into OceanBank's activities. In the wake of the scandal, he was sentenced to 18 years in prison, marking another high-profile casualty of this far-reaching investigation. This tactic, colloquially referred to as paying extra, was not exclusive to OceanBank. It was a widespread issue in the Vietnamese banking sector at the time. Banks would offer their customers interest rates higher than the ones officially set by the SBV, in an attempt to lure and retain their customer base. This practice, while perhaps initially appearing beneficial to the customers, was fundamentally destabilizing the banking sector and the broader economy. It demonstrated a flagrant disregard for the financial controls set by the SBV, and underscored the deep-seated issues in Vietnam's banking sector. The impact of the OceanBank scandal was not limited to the bank itself. It shook the Vietnamese banking sector to its core, revealing the deep-rooted issues of governance, oversight, and regulation that plagued the industry. It marked a watershed moment in the history of Vietnamese banking, prompting sweeping reforms and renewed vigilance in ensuring financial stability. In response to the unfolding scandal at OceanBank and the threat it posed to the wider financial system, the Vietnamese government felt compelled to intervene. The nature of the alleged fraud and the scale of the financial mismanagement at the bank was such that its potential collapse could have sent shockwaves throughout the country's economy. In April 2015, the State Bank of Vietnam, or SBV, made a landmark announcement. In an unprecedented move to stabilize the beleaguered bank and the financial system at large, the SBV stated that it would acquire OceanBank for 0 Vietnamese dong. This effectively nationalized OceanBank, placing it under government ownership and oversight. This move was designed to prevent the bank's potential collapse, which could have caused significant disruption to the country's financial system. This acquisition of OceanBank by the SBV also represented one of the only few instances in Vietnam's history where the central bank had directly taken control of a commercial bank. The move was significant, both due to the scope of the intervention and the message it sent to the banking sector. It signaled a new willingness on the part of the Vietnamese government to step in directly to protect the nation's financial stability. However, this dramatic intervention was about more than just OceanBank. It was part of a wider effort by the Vietnamese government to clean up the country's banking sector, which had been plagued by issues of corruption and poor governance. The nationalization of OceanBank was therefore also aimed at restoring public faith in the Vietnamese financial system, which had been severely shaken by the scandal. The government's intervention in the case of OceanBank thus marked a turning point in Vietnamese banking regulation. It demonstrated a newfound assertiveness in dealing with corruption in the banking sector, and set a precedent for potential future actions against other financial institutions engaging in unlawful practices. It was a clear signal that the Vietnamese government was prepared to take decisive action to safeguard the integrity of the country's financial system. The scandal of OceanBank serves as a cautionary tale for countries seeking to develop their financial sectors and promote economic growth. While Vietnam's Doi Moi policy helped to spur rapid expansion in the banking industry, it also exposed the country's financial system to a range of risks and vulnerabilities. But anyway, do let us know what you think. Thanks for watching.